This is the best stochastic indicator trading strategy for every trader. It does not matter if you are trading Forex, crypto or stocks. It works on all the markets, and it will only work better for you if you follow everything carefully to the end, as I will be revealing a lot in this video. Now, let's dive inside the business. The stochastic indicator is loved by many traders, and it's very popular among traders because this indicator can be used to analyze the market in different ways. It can be used as a momentum indicator, and it can also be used to predict trend reversals by identifying the price movement when the indicator fluctuates to the overbought and the oversold levels. In the other video, I talked about the RSI indicator, which is similar to the stochastic indicator, although there are some differences. But here is what makes the stochastic indicator a bit better than the RSI indicator. The stochastic indicator shows us a clearer market information when it comes to the overbought and the oversold signals. You can see that the stochastic indicator moves a lot more cleaner and smoother between the overbought and the oversold levels than the RSI indicator, which moves a lot more sideways in divergences. Another reason is because the stochastic indicator has two lines, called the K percentage and the D percentage, which can give us additional signals when they get to the overbought and the oversold levels. But the RSI moves only with a single line, which does not give us more information on the chart, and that's why the RSI is better to be traded with the divergences than using the overbought and the oversold levels, and all that I have taught in my RSI trading strategy video on this channel. The stochastic indicator does not initially come like this when you add it on TradingView or MetaTrader 5. In order to get the stochastic indicator moving smoother like this on your chart on TradingView or MetaTrader 5, follow these steps carefully. In order to add it to your TradingView, go to the Indicator tab and select Stochastic Indicator, and then use these settings. At the input, make the K length 14, the K smoothing should be 3, and the D smoothing will be 3. When you are done with that, go over to the style and make sure the upper band is set at level 80, the middle band is set at 50, and the lower band is set at level 20. When you are done with that, leave the other settings at their default state, and here you will have a smooth stochastic indicator. In order to set it up for your MetaTrader 5, go to the indicator option and select stochastic indicator, and after that change the settings of the indicator to this. The K period should be 14, the D period will be 3, and the slowing will also be 3. The price field should be set at low and high. Make sure the method is set at simple, and the levels must be 20 and 80. And when that is done, you will have a smoother stochastic exactly like this on your chart to generate great signals for you. And now, when that is set and done, let's see how the stochastic indicator actually works. When we are using the stochastic indicator, we use the K and D lines to predict when the stochastic indicator is heading. If the K line crosses above the D line, it shows us that the stochastic is going upwards. And when the K line crosses below the D line, it shows us that the stochastic is going downwards. Okay, now it's getting more interesting. As you listen, one of the common mistakes that most beginner traders make is taking a buy trade immediately the stochastic indicator touches the oversold level, and taking a sell trade immediately the stochastic indicator touches the overbought level. And the reason why that is not a good way of trading the stochastic indicator is because in a strong trending market like this one, the stochastic indicator can remain at the overbought level for a very long time. And when the market is in a strong downtrend like this one, the stochastic indicator can also keep hanging around the oversold region for a very long time. Now, take a look at this example. Here the market is in an uptrend, and the stochastic indicator hit the overbought level. But instead of the market going down for those who immediately sell at the overbought and the oversold levels, It kept moving higher and higher, clearing out their stop loss and becoming a losing trade. Let's see another example of this. Here the market is moving in a downtrend, and when you look at the indicator, you can see that each time the market hit the oversold level, the market price kept rejecting it, and instead of the prices moving up as planned, the prices did the reverse and kept going lower and lower, facing multiple rejections from the market. But why do all this keep happening to those who trade immediately at the overbought and the oversold region? It is simply because trading against the trend is not a good idea. No matter the strategy you are using while trading, either it is pure price action or indicators, you must make sure that you are trading with the trend to guarantee you more winning on your trades. And in order to trade the stochastic indicator with the trend, we are going to be combining it with some other trend indicators. And the first is the 200 exponential moving average. We are going to be using the 200 exponential moving average to give us a clear indication of the market trend. This way we can be more confident and safely trade the reversals, knowing that we are always following the trend. And how this strategy works with the 200 exponential moving average is very simple. When the price is moving above the moving average, we are only looking out for buy positions. So if the price is above the moving average and the stochastic indicator hits the oversold region, you take a buy position. And when the market is moving below the 200 exponential moving average line, we are only looking out for selling positions. So when we have the market moving below the moving average line and the stochastic indicator hits the overbought level, we take a sell position. But hey, tribe soldiers, know that you cannot take a buy or sell position because the stochastic indicator hit the overbought or the oversold levels. You need to wait for the stochastic indicator to indicate that the reversal will happen. You do this by waiting for the stochastic indicator to cross back inside the overbought or the oversold levels like this one, meaning that you have to wait for the K line to cross below the D line and then fall back into the overbought level to generate a great sell signal. And for reverse, you wait for the K line to cross above the D line and then move back into the oversold region to make a great buy signal. Now, let's see our exit plan. So if you are taking buy positions, you want to place your stop loss below the last swing low and your take profit target at the next high or 2 times your stop loss. And if you are looking on taking a sell position, you want to place your stop loss above the last swing high and your take profit target at the next low or 2 times your stop loss. Now, let's see some examples of this strategy in action. So here you can see that the market is moving above the 200 exponential moving average line, and because of that, we are only looking for bullish reversals, and to get that, we must wait for the K line to cross over above the D line and move into the oversold level. And that you can see happening on the stochastic indicator, giving us a clear go ahead to buy the market. And when we enter the market, we place out stop loss below the last swing low and your take profit target 2 times more than our stop loss. Watch how we are following the strategy, step by step. And here we are, tribe soldiers. See the result of the trade. Take profit got hit successfully. Now let's see another example. Here you can see the market moving below the moving average line, which is an indication that we are in a downtrend and we will only be looking for bearish reversals. And to get that, we wait for the market to hit the overbought region, which you can see here. And after that, we wait for the K line to move below the D line and cross inside the oversold level. And that you can see here. And since we have everything complete, there is nothing holding us back from taking a sell trade at this level. So we enter a trade here and place our stop loss above the last swing high and our take profit target 2 times more than our stop loss. And here you have it, tribe soldiers. The take profit target got hitted successfully. Another successful trade. Note that we are not taking any positions except the stochastic indicator lines, which is the K line and the D line, have fallen back into the overbought or the oversold levels, and this stochastic indicator strategy can be used on different time frames. But I strongly advise you use it legitimately for day trading and for scalping, as it works best in that aspect. Trade it with the 15 minutes time frame, the 5 minutes time frame, and the 1 minute time frame. Don't go using this strategy for swing trading on higher time frames like the 4 hours and the daily time frames, as those higher swing trading time frames are best traded with pure price action strategies. And to lock in into pure price action and enter into the higher levels of trading, this course will take you there. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.